What's going on, guys? It's GBP baby. Welcome to another video. It's currently 11:23 p.m. on Thursday the 4th of January, and yeah, we're going to start on the weekly, and that's because we have non-farm payroll tomorrow, meaning that we can anticipate a lot of volatility tomorrow. And you'll see that on the weekly we have actually ran up into this fair value gap, which is nice to see. And you'll also notice that prices remain below the 50% level of it. Now what I'm looking at, this candle wick now has rebalanced with this candle, so I did have my eyes on this candle. I believe if you watched my weekly review last week, you'll remember me mentioning this wick. But it's nice to see that we traded into it. We've actually traded to the 25% level. I'm just going to draw that out for us. And yeah, we'll drop down to a lower time frame as per usual and take a look at what I'm anticipating. So we've traded to that 25% level. We've taken out this swing high, and obviously we have non-farm payroll tomorrow, meaning that we can expect a lot of expansion. You'll recall that we ran out these relative equal highs as I expected yesterday, which is nice. And yeah, we didn't quite trade into this volume imbalance. I do want to see this as like a breakaway gap, as in I don't really want to see it get traded into at this point. Here's Thursday's price action. You can see that we have actually respected the 25% level again off this wick, this daily wick. I would have allowed up to here for us to trade to the 50% level, which would have been fine as well. So what I'm going to do is I'm going to mark that out, because there is still potential for price to want to draw up to this level, and I'll explain why in a bit. You'll see that we traded lower into this wick, but other than that, not really much has gone on. Obviously we have this massive gap, and with me expecting lower prices, I'd like to think that this volume imbalance would get drawn to in the new day. Now let's say we trade higher tomorrow instead of lower. It would simply mean that I'd now be expecting a run above these swing highs in the coming weeks. So if my analysis is wrong and we start to trade higher, running out, say if we run out Wednesday's high, and if we run out Wednesday's high and run out the 50% level of this weekly fair value gap, then my bias would change, and I'll probably just get out of the charts completely, purely because that's not what I'm anticipating. So I'm going to just quickly write down weekly fair value gap. But other than that, I do want to see a continuation to the downside. Now there's that 50% level I've marked out. You'll see it's in this 4-hour bearish order block. There's relative equal highs resting just above here. And if you remember yesterday's video, I did mention that this 15-minute fair value gap, I want to see it get traded into. And you'll see that pretty much the whole day we've just avoided it. So the fact that we've avoided it the whole day is saying to me that we're either going to trade into it tomorrow and see a nice reaction away from it, or we're going to trade through it completely now. Preferably, I'd like to think that this is exactly what I said yesterday. I said I wanted to see it trade into it and then I'll see a rejection. But you'll see that we did wick into it, but we haven't traded into it properly. So that's why I'm saying now, Friday with non-farm payroll, I'd like to think that we can trade into it to offer us a bearish entry, not entry, but a bearish signal on dollar. Now this happened on Tuesday. Very weird price action, but it did create relative equal lows. So I do want to bring our attention to these lows here, and this may be a target for sell side on dollar. And I do believe this is what created the gap, that massive gap that we saw. Because you'll see that sell side is below this low, because there's technically a fair value gap down here. So that's a daily low technically that we can keep our eyes set on. So what I'm going to do is let's just use a ray. But that's what I have my eyes set on for us to trade to. Now, like I said, let's say we do trade higher. It wouldn't be a problem. It would simply mean that I'd get out of the charts because if it trades higher, I'd get out of the charts because it's not in line with my bias, and I'd simply wait for, next week's price action to start figuring out, okay, are we going to run for these relative equal highs up here? But like I said, in my weekly review, I am expecting a down month, so seeing the high get created this early of the month potentially is not a problem at all. So that's pretty much what I'm keeping in mind. Again, not much price action. We traded lower, traded this fair value gap. This bullish order block, sorry. Ran out some stops below this low, kind of consolidated, and now this 15-minute fair value gap is still staying intact. And like I said, with non-farm payroll, I think we can trade into that. So let's just quickly mark out Friday. Get the days of the week sorted. Another reason I doubt price going higher is because anyone who was long from Tuesday, sorry, this week, the first day of the trading week, they're all going to be in profitable positions. So it's unlikely dollar's going to want to allow all of those people to stay long. They're going to want to trap them, is what I'm saying. And in order to do that, it would be to send price lower. That's how I see it anyway. So that's one thing to take note of. Let me just put there 5 o'clock there. And I'm going to drag this out, and then at least I know that this now is our move into Sunday over here. In terms of how we're going to deliver, I'm not going to say too much because, like I said, we're pretty consolidated right now, so it's not really ideal. But another thing to take note of is we have a range now. We have this high and we have this low. So what we can do is we can, using ICT's Fibonacci optimal trade entry, we can see that the optimal trade entry lines up perfectly with the 15-minute fair value gap. So that's another thing to take note of as to why I'd want to see price turn around at this level. And then if you watch yesterday's video, you'll know how this high took out this high, and we've run out relative stops above here already. So I'm going to grey this out just so that we know that that's been traded to. And yeah, that's all I'm expecting. Trade into 15-minute fair value gap, and hopefully see if we can turn around. If we trade aggressively higher, so be it, and we'll just do some reanalysis on the weekend. So let's now go to GBP. We're going to start on the weekly on GBP as well. Now GBP is already taken out a weekly low here, so GBP is already traded to a discount PD array and took out sell stops below there. So that means we should be looking at PD arrays above the market price, which is here, and we have this beautiful wick on the weekly here, and I want to look at the 50% level of that as a potential target. Another thing, before I do that, I do want to bring our attention to 50% level of this bullish order block. So 50% off a bullish order block is what we call mean threshold, and you can see that we traded beautifully to the 50% level of that and reacted away from it, showing that this bullish order block is still intact, and that's what I want to see for a suggestive move to higher prices. What I'm going to do is I'm going to mark out the 50% level of this wick. And that's going to be our target for a potential target for the new day. So then we drop down to the daily. You'll see that we traded higher into these wicks, into this bearish order block as well, traded back lower. But one thing to note is that we've closed inside of this fair value gap. The fact that we closed inside the daily fair value gap, I'd now want to see this fair value gap provide support with inside it, if that makes sense. So yes, we can wick outside of it in the new day, but overall, I want this fair value gap to help push price higher and like I said, run into this rejection block and into Thursday's highs. So I'm going to also write rejection block here. Let's type weekly consequent encroachment here. And then we've got a daily rejection block here. So now we've got two levels that price may want to draw up to if we are to have a bullish day. I am also going to look at the 50% level of this, because this wick here is a range which remember, gaps are fair value gaps too, and we've traded through on the upside, meaning that this gap, let's get a box. This should now act as support. I'm going to make this black and I'm going to draw a midpoint on it because I want this midpoint to be respected in the new day. So let's just do that. And then what we do is we drop down to the 4 hour now. And you can see we've reacted off this bullish order block today, traded down into it. And now we're kind of just consolidating, like I said, within that range. I'm going to get the 50% level off this as well, just so we can watch our price trades. This fair value gap also up here, what does that line up with? It lines up with our weekly consequent encroachment. So that's another thing to take note of as to why price may want to draw all the way up there. Let's go to the 1 hour, have a look. Traded down, back into this wick, as you can see, traded higher, ran out these stops. And now, like I said, we are simply just consolidating. Another thing to take note of is the total range that we're currently trading in. So from this high down to this low, you'll see that we've traded above the 25% level up to 50%. At 50%, we expect a reaction. That's what we've got. But like I said, I want to see a continuation to the upside. Furthermore, if we look at the more lower time frame range, so this high to this low, you'll see that we traded above the 50%. Nice run on stops. So I'd like to think that we can push through that 75% level running into these highs. And these are all pretty much relative equal highs up here. So that's another thing to take note of. What was it? Oh, this is the daily. What was this daily rejection block? Yeah, I want to see price trade up into that. I want to see it push into that and potentially into the weekly consequent encroachment. Make that thinner. 15 minute, not really much. Again, traded higher, pull back on ourselves. You can see when we're consolidating like this, it's likely due to accumulation. Again, we do have non-farm payroll tomorrow, so we're expecting movement. These relative equal highs are looking juicy, and like I said, we have a nice, was it a 4 hour? We have a nice 4 hour fair value gap residing up here that may want to get traded to. So that's everything on GBP. Pretty much just want to see the low get made a low around here, and then hopefully more bullish price action for the rest of the day. For me to change my bias as to us being bullish, I'd want this wick would have to get traded below. So let's say we have a big down candle that trades below this bullish order block here. If that happens, then I'll change my bias and I'll get out the charts because it's not in line with my bias. Simple as that. So this is the lowest I'd want to see price go. Now let's go to Euro USD to finish off. We'll start with the weekly again. You'll see we traded nicely down into this bullish order block. And we've had a nice reaction off of that. And now we need to look for some kind of bullish PD arrays. Similar to pound, we have this wick here. We may want to trade to the 50% level of that. So we can draw that out. You know what, I'm going to use a ray. I should have used rays on the other one as well, on the pound, but I'll change that off camera. So that's 109.29. And then we'll type weekly consequent encroachment. And then we have this rejection block just above here. And we know this is a rejection block because look what happened. As soon as we opened, we moved lower on Euro, showing that this is a rejection block. So this is another level that price is going to want to draw to. Now let's go to the daily. You'll see we had a nice big down day. We have a nice fair value gap as well. So price is going to want to draw into that, trade deeper into it. Thing about Euro, it was showing a significant amount of weakness, which isn't ideal. I do like the fact that volume has stayed above this swing low though. We're not really respecting much PD arrays, so to speak, which isn't ideal. But I think on the lower time frame, we should be able to see a little bit more. We traded down into this bullish order block here. You can see we respected the 50%, closed above it, and then look, we've had a nice break in market structure above this swing high. So now that this swing high has been broken here, we can now look at this level and keep an eye on it. I want to see price. Basically, I want to see price trade above that and close. Once it closes above this, I'll be happy to be long in up into the rejection block and potentially into that weekly consequent encroachment. This is a weekly rejection block, so I'm going to write that down. And then this is the swing high, which is broken. So I've basically just got my eyes on it, and I'm looking how price now trades above it. I'm thinking whether it should be this swing high really, because that's the last up close, but we'll keep an eye on this. Now let's drop down to 1 hour just to have a look. Again, kind of just consolidating around. We do have a break, a wick here, this level that we traded down into. If you watched yesterday's video, you know I called it. We traded down into that nicely, so I'm going to keep our eyes on that as well. We'll make this a lighter blue. We'll take off the midpoint. So price is allowed to trade down and wick into that and potentially offer us a nice entry because we've got relative equal lows. Look at these. Look, the manufacturing liquidity, engineered liquidity this is. We have a nice, technically this swing high is the breaker. Low, high, low, low. So we can draw that out, and then we have a nice consolidation here that we may want to return to. It's very typical of price action to do that as well. To return back to the original consolidation, which is here before the move. So this is the consolidation that happens before the move that takes up the high. So we can anticipate price want to draw down potentially back into that before running up higher. It should be a nice low liquidity, low resistance run as well. And we know that because if you look on the hourly, look at that delivery down. So it should be easy for price to cut through that. And that's what non-farm payroll tends to do, isn't it? Very quickly as well. But we'll see in terms of if I'm wrong. If I'm wrong, then price will simply trade lower. What would have to happen for me to change my bias would be that price trades below this. So if price comes outside below this order block, price trades below that, I'd, like I said, change my bias, stay out the charts and wait. Simple as. So yeah, everyone stay safe. Hope everyone's had a good week and a happy new year, and I'll catch you on Sunday with my weekly review. And I do have some cool content dropping on Friday and Saturday, so make sure to turn on post notifications and hit subscribe. Peace.